Hey everyone, welcome back to Corporate Decoder, where we dive into the nitty-gritty of company reports to uncover their secrets, and boy do we have a doozy for you today. Today we are unboxing the annual shareholder report for the TradersAI Large Cap Equity and Cash ETF. And let me tell you, this report reads like a financial thriller, with more twists and turns than a roller coaster. So what is this fund all about? It is designed to provide investors with a tailored shareholder report, aiming for maximum total return. It kicked off operations on the 23rd of October 2024, and this report covers the period up to the 31st of August 2025. We're going to break down their performance, what they invested in, and what all those fancy financial terms actually mean for the everyday investor. And hey, if you like getting the straight scoop on corporate filings without all the jargon, make sure you are subscribed and join our Discord community linked in the description below. Alright, let's talk about what this fund was actually holding. As of the 31st of August 2025, a whopping 97.9% of its assets were in cash and other. That is a massive chunk, suggesting a very conservative or defensive stance. Then we have purchased options at 0.048% and written options at a negative 0.023%. Futures contracts made up a tiny negative 0.004%. This mix tells us that while they are involved with options and futures, the overwhelming majority of their capital is parked in cash. Now, let's peek at the top holdings. The biggest single position is an E-mini S&P 500 index put option with an expiration in September 2025 and an exercise price of $6,490, accounting for 2.6% of net assets. Following that, an E-mini S&P 500 index call option, also expiring in September 2025, but with an exercise price of $6,480, making up 2.2%. Then we see a negative position in an E-mini S&P 500 index put option, expiring in September 2025, with an exercise price of $6,485, which is at a negative 1.4%. They also hold negative positions in E-mini S&P 500 index call options and futures contracts. This means the fund is actively using options and futures, but the sheer amount of cash suggests a strategy focused on hedging or potentially capitalizing on very short-term market moves, rather than holding a large portfolio of stocks. Looking at the security types, it's a bit of a mixed bag. We see purchased options at 0.048%, written options at negative 0.023%, and futures at negative 0.004%. But the elephant in the room is cash and other at 97.9%. This means that overwhelmingly the fund's capital is held in cash and very short-term investments, with a small allocation to options and futures. Let's talk money. How much did it cost to invest in this fund? For a hypothetical $10,000 investment, the cost was $104, which works out to 1.25% of that investment. That might seem a bit high if you are just parking money in cash, but it depends on the strategy. Now for the juicy part performance, if you invested $10,000 on the 23rd of October 2024, by the 31st of August 2025, your investment was worth $9,376. That is a loss of about 6.24%. Meanwhile, the S&P 500 Total Return Index, which is a benchmark for broader market performance, grew to $11,269 over the same period. So this fund significantly underperformed the market. Let's zoom in on the annual performance, or rather since inception performance, since it is a new fund. TradersAI Large Cap Equity and Cash ETF saw a minus 6.01% return, while the S&P 500 Total Return Index saw a strong 12.69% return. This again highlights a considerable gap, with the fund losing money while the market was gaining. The report itself tries to explain this underperformance. It mentions that 2025 was a year of monetary inflection and an AI infrastructure boom, with the S&P 500 advancing over 10%. However, it states that the HFSP ETF faced headwinds due to its reliance on exploiting intraday market inefficiencies during moderately high volatility, but the report acknowledges that the historic volatility starting in April and May was outside the normal distribution ranges for their models, leading to lagging performance. Additionally, it points out that during broad market rallies, the fund's tactical allocation between equity and cash meant it underperformed because its intraday models couldn't fully capture multi-day rallies when volatility was compressed. The report also touches on trading frequency and cost implications, noting that their strategy of entering and exiting positions almost daily resulted in elevated operational and opportunity costs, increasing transaction expenses. Despite these issues, the fund claims it continued to deliver returns with very low correlation to the S&P 500, fulfilling its unique selling proposition of non correlated or low, correlated returns without sacrificing liquidity. As of the 31st of August 2025, the fund size was $926,000. It had 7 holdings. The total advisory fee was $10,670. Interestingly, the portfolio turnover rate is listed as 0%. This seems to contradict the earlier description of entering and exiting positions almost on a daily basis. A 0% turnover rate usually means the fund barely bought or sold any securities over the period, which is quite unusual for an actively managed fund, especially one that claims to employ an intraday trading strategy. There might be a nuance here in how turnover rate is calculated for this specific fund. Or it could be a point of confusion. Let's get into the nitty-gritty of the financials, the schedule of investments. This shows us exactly what the fund held. We see purchased options valued at $43,650, which is 4.8% of the total net assets. Under this, there are call options at 2.2% and put options at 2.6%. The short-term investments, specifically money market funds, represent 0.5% at $4,975. The total investments come to $48,625, representing 5.3% of the fund's assets. The vast majority, 94.7%, is in other assets in excess of liabilities, totaling $877,093. This confirms that the fund is heavily weighted towards cash or cash-like instruments. Now, looking at written options, we see a negative position of minus 2.3% at negative $21,300. This includes call options at negative 0.9% and put options at negative 1.4%. Their premiums received for these written options were $22,483. So they are selling options, which is a strategy to generate income, but also carries potential risks if market movements go against their prediction. The schedule of futures contracts shows a negative position of minus 0.4%, meaning the fund has net sold futures contracts. They sold 6E Mini S and P500 index futures contracts expiring in September 2025 and purchased 6E Mini S and P500 index futures contracts expiring in December 2025. The net unrealized depreciation on these contracts is $3,552. This indicates they are actively managing futures positions, likely for hedging or speculative purposes. But the net effect is a slight reduction in asset value from these contracts. The statement of assets and liabilities for the 31st of August 2025 shows total assets at $947,986. Liabilities include written option contracts at $21,300 and payables to the advisor at $968, coming to total liabilities of $22,268. This results in net assets of $925,718. The net asset value per share is $18.51. This balance sheet confirms the fund's financial standing at the end of the reporting period. Let's look at how the fund made and lost money. For the period ended the 31st of August 2025, investment income was $21,739, mainly from interest income. Expenses were $10,670, primarily the investment advisory fee. This gave them a net investment income of $11,069. However, the big story here is the realized and unrealized gain or loss column. They had a net realized loss of $97,653 from investments, written options, and futures contracts. On the unrealized side, they had a net change in unrealized appreciation or depreciation of negative $5,011. Altogether, this resulted in a net realized and unrealized gain loss of negative $102,664. This massive loss is the primary driver behind the negative overall performance. The statement of changes in net assets shows the overall movement. The net investment income coupled with realized and unrealized losses led to a net decrease in net assets from operations of $91,595. They also had distributions to shareholders of $15,326. Capital transactions, which include subscriptions and redemptions, brought in a net positive of $1,032,639. Overall, the net increase in net assets for the period was $925,718, bringing the total net assets to $925,718. This period saw significant inflows of capital, which is interesting given the poor performance. The financial highlights offer a per-share view. The net asset value at the beginning of the period was $20. The total from investment operations was negative $1.2 per S-share. Distributions totaled $0.3 per S-share. The net asset value at the end of the period was $18.51. The total return for the period was a negative 6.01%. The ratio of expenses to average net assets was 1.25%, and the portfolio turnover rate remained at 0%. It's really interesting that with an intraday strategy, they report a 0% portfolio turnover rate. This often means that the fund primarily uses derivatives like options and futures, which are accounted for differently than direct stock holdings, in terms of turnover calculations. Or it could mean that for the period they largely held their positions open and didn't actively trade underlying securities. Now for the legalese, the notes to financial statements. These provide crucial context. Note 1 explains the organization, that the fund is a series of Tidal Trust III, and that Tidal Investments LLC is the investment advisor, with TradersAI Inc. as the sub-advisor. It also clarifies that the fund commenced operations on the 23rd of October 2024 with an objective to seek maximum total return. Under significant accounting policies in Note 2, they detail their security valuation methods. They use quoted prices for actively traded securities and fair value for those without readily available quotes. They break down their valuation inputs into Level 1, Level 2, and Level 3. Level 1 are unadjusted quoted prices in active markets. Level 2 are observable inputs. And Level 3 are unobservable inputs. As of the 31st of August 2025, all their investments, including purchased options and money market funds, were valued at Level 1, meaning they were based on unadjusted quoted prices in active markets. This is consistent with their heavy allocation to cash and exchange. Traded derivatives. Note 2 also covers federal income taxes. The fund has elected to be taxed as a regulated investment company and intends to distribute its taxable income to shareholders. This means it generally avoids paying corporate income taxes itself. However, it needs to distribute at least 98% of its ordinary income and 98.2% of its capital gains to avoid excise taxes. The notes also delve into derivative instruments, explaining the risks and mechanics of options and futures contracts. They detail how purchasing call and put options gives the right, but not the obligation, to buy or sell, and how writing options generates premium income, but carries obligations. The fund uses these instruments for hedging and potentially for income generation, but the complexity and risks are clearly laid out. If we look at the statement of assets and liabilities with regards to derivatives, we see that purchased options are assets valued at $43,650, while written options are liabilities valued at $21,300. The futures contracts show a depreciation of $3,552. This is where the reported values on the balance sheet directly reflect the impact of these derivative positions. Then we have the report of independent registered public accounting firm. Tate, Weller and Baker LLP has audited the financial statements. They state that in their opinion, the financial statements present fairly, in all material respects, the financial position of the fund. They've been the auditor since 2025 and conducted their audit according to PCAOB standards. Under other non-audited information, we see details on dividend income. For the period ended the 31st of August 2025, the TradersAI Large Cap Equity and Cash ETF had 0.00% of its ordinary income distributions designated as qualified dividend income. Similarly, for corporate shareholders, 0.00% qualified for the dividends received deduction, and 0.00% were designated as short-term capital gain distributions. This indicates that the fund's income, if any, did not primarily come from sources that receive special tax treatment for individuals or corporations concerning dividends. Finally, the report is signed by Eric W. Falkes as President Principal Executive Officer and Aaron J. Perkovich as Treasurer Principal Financial Officer, dated the 6th of November 2025. This officially certifies the accuracy of the filing. Now, let's talk about what all of this means. The TradersAI Large Cap Equity and Cash ETF, in its first reported period, has shown a significant underperformance compared to its benchmark, the S&P 500. While the market was up over 12%, this fund lost over 6%. The report attempts to explain this by citing the fund's intraday trading strategy and how it struggled with unexpected volatility and broad market rallies. The massive allocation to cash suggests a defensive posture, and the use of options and futures indicates a more complex strategy than a simple buy and hold. However, the claim of 0% portfolio turnover is quite puzzling for a fund that describes itself as actively trading intraday. This might be due to how derivative contracts are counted, but it certainly raises questions about the consistency of the stated strategy and its reporting. The substantial net loss from realized and unrealized gains and losses, even with some capital inflows, is the most critical takeaway here for investors. The fund's promise of low correlation to the market is a potential strength, but it came at the cost of significant underperformance in this reporting period. Whether this strategy can be refined to capture gains more effectively in the future remains to be seen. Alright, that is our breakdown of the TradersAI Large Cap Equity and Cash ETF's annual shareholder report. What is your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.